What's up everyone, it's Caddy with Money Investing. So I hope you all are having a great weekend. I hope you guys had a great weekend. So I figured I'd just go over some of the top stocks to watch going into next week. I just could not stay away from my computer for very long. I obviously don't like the long weekends, but Monday we didn't have any trading, and tomorrow we're going to be starting off with another week. And the futures right now are pretty much a little bit green. So the Nasdaq futures, I think they are up a little bit. Let's take a look. So they are up over 15 basis points, and we got the S&P 500 futures also up over 8 basis points, and the Dow futures also green so far. But of course, we're gonna find out where the markets open in about 6 to 8 hours pre-market. So, all right, good day from Australia. Mohit, welcome on board. Raghav, thank you so much for joining. Eric, welcome. Azar, Bernardo, thank you so much for joining in. I think it's pretty late, right? It's a little bit past 10 p.m. Eastern in the Northeast, and it should be like 8 p.m. Or 7 p.m. in California. But of course, everywhere else, it's going to be different times. But thank you so much for joining in. I'm going to break down some of the stocks that you guys also want me to. And I hope you guys are excited for yet another week. We got inflation week. We got PPI numbers coming out. So producer price index, I covered that a little bit earlier. So 2 p.m. in New Zealand. So that's not bad. I think it's pretty good. Nice surprise, Caddy J. Welcome on board. Wow, live. Perfect. All right, we're gonna break down some stocks. Super excited to do that. The VIX is still down. Trading as well as 16.4. So this right here is kind of like a support level. Resistance next, I'm gonna be watching at 20 level. If you do get that spike once again, be ready for the S&P to also pull back a little bit, just considering where the valuations have been. And we'll cover some stocks here. So let's just go over. All right, Kevin, let's just go over DraftKings first. So DKNG, you'll notice that DraftKings has been trading in that range, so it's been consolidating for a really long time. After we saw that breakout, a couple times, DraftKings tried to break out over $55.50. So this right here was a clear resistance for DraftKings before we finally got that breakout on this day. So August 24th, I actually did put out a video on this as well. And then we saw some more continuation for this company. And the following day, you'll notice the volume really spiked. So if you guys will notice all the way down here, the volume bar, after the breakout, we saw the volume at over 26 million shares and a jump of over 6% for DraftKings. And since then, we have pushed up. We are only up a little bit close to over 2%, nothing crazy, but that next target and that next resistance for me is going to be at $65 a share. So that is the level that I'm watching next for DraftKings. Support stays put at close to $55.50, all the way as low as these moving averages, which are sitting roughly at $52, $53 a share. So I do believe that DraftKings has some more room to the upside, but just be mindful that the RSI, the MACD are overbought at these prices. So you'll notice that RSI has obviously been creeping up. We're just under 70 levels, so we're just under overbought levels, and the MACD's obviously been pushing higher as well. So $65 is going to be that next level to watch for DraftKings as a target, and $55.50 remains our support. And of course, with the NFL starting very soon, I think September 9th, so this weekend, this Thursday, I think it's going to be starting, and then of course a lot of pretty much sports season are going to be starting as well. DraftKings benefits from that. So we'll see where we end up next week, but I am expecting a $65 retest going into next week, kind of some more continuation as well. All right, so let's see. DraftKings we went over. Let's just go over Riot, please. I'm holding Mara, already looking to start a position in Riot. So Riot, I'm not a huge fan, only because I don't know. It kind of looks good for a breakout pattern. So you'll notice it's forming some type of an ascending triangle, but the correlation between Riot blockchain and some of the cryptos have not been as great as what we have seen for Mara, right? So we have been trading Mara in general, and that's been doing really well. I think it's up a little bit over 120%, but for Riot, I can't say the same thing, right? It's up just over 58%, so half the actual amount of Mara. So the correlation isn't perfect when you take a look at the actual cryptos and with Riot Blockchain and Marathon Capital. But of course, crypto has been doing really well. If you come over to our crypto watch list, Ethereum almost at 4,000 once again. Bitcoin on the breakout here, up over 52,000, right? So in the last couple days alone, September, so we went into this weekend on September 4th. So September 4th, we were right there. So we were trading just under 50,000. So over the weekend, Bitcoin actually gained a couple $1,000 and basically rallied over 5.88%. So, in my opinion, Mara is going to potentially retest highs of 47 we're certainly seeing a breakout over 45.50 going into next week. I mean, that is kind of like my prediction going into next week, that we are going to see a breakout over 45.50, and then the next resistance, the next target, I'm going to be watching at $58. So that is my next target right there for Mara. And of course, 45.50, I'm expecting a breakout just considering where Bitcoin is and how much we rallied over the weekend, over the long weekend. But for Riot, I don't know. I can't say the same thing because it hasn't worked out similar to what we have seen for Mara. Even though it's still forming an ascending triangle, so we're still kind of like this higher lows, and we have a resistance at $40, it hasn't moved, right? We've seen kind of like this downtrend, we've seen those dips, even though Bitcoin's been doing really well, even though Ethereum's been doing really well. But if you were to trade this, I would watch those moving averages. So if I were to remove all of these, we're kind of testing that 200 SMA. So 200 SMA, we've kind of tested that level a couple times, once here. So we perfectly validated on May 18th before rallying over 77%. We briefly breached that level here before reversing back up, and then another validation right there on August 19th. So right now we're just coming back down, hence the ascending triangle. If we get that validation, then yes, I could see a breakout over $40 a share. But if we get that breakdown below the 200 SMA, then there is potential downside for this stock. So I'm personally more of a fan of Mara than Riot, but from a technical standpoint, this still looks like an ascending triangle that could lead to a potential breakout as well. All right, so we went over. Let's take a look at Fiverr, see how that stock is doing. So Fiverr, I am long-term bullish on, but as you guys already know, that I don't like to overpay for a stock. I want to pay something that's very, very undervalued and underpaid for a company. We're still waiting at $153. We established a small position at close to 160s for this stock when it was just after this breakdown that we saw after the earnings. We've done decently well. I don't want to say it was a great trade. I mean, I think we're up a little bit over 10% on this, but $180 is still that resistance. I still have this level as some type of an area where Fiverr continues to get rejected at, right? So this is going to be the rectangle, the red rectangle, where we are just kind of fighting that resistance for the last 3 to 4 days. Earlier it was $180. Now it's kind of seems like it's 186-ish level. So we've just been getting rejected. High for the day 186.42. High for this day on August 30th 186.74. High for this day 185.50. So there is a lot of resistance at that level for Fiverr. So 180 is still going to be a near-term support because we're trading just above that level, and you'll notice the low for the day on Friday was 180.50. So that is still a support. However, I would not be surprised if we see kind of like this curl back pattern for Fiverr to come back, retest those at 150, right? At that point, I will be adding more shares for Fiverr. Even if it comes down to 128, I mean, that would be ideal for this company, right? Just imagine how much we would be down from all-time highs. So earlier, $336 is the all-time high for Fiverr, and we are already down a little bit over 45%, but at those prices we'd be down over 62%. And it's not like we bought over here all the way to highs of $250, $300. We actually bought in at closer to 160, right? So we're getting this at a huge discount, but don't get me wrong, the valuation is still pretty rich, but that is okay. I'm willing to take that risk just considering the growth of this company. So 180 near-term support going into next week, all the way as low as 153, all the way as low as 128. Those are some levels to add, in my opinion. That's where I would be adding. And then resistance, of course, is going to be all the way as 229. That's the next target. If you get that breakout and then more continuation for Fiverr. All right, so Jason, VIX and VXN, quick update on that. So VIX is still trading as low as 16.4. The market is currently closed for the volatility indices, even though the futures are open. But going into next week, I do expect some volatility spikes just because we've got the inflation data coming out. There is going to be some uncertainty. We got the beige book that's going to be 2 weeks prior to the actual FOMC meeting. Orange juice is where it's at. And then we've also got the actual FOMC meeting on September 22nd, right? So we got the PPI numbers coming out this week. Then next week on Tuesday, we got the CPI numbers. We're kind of light on earnings, but we are heavier on the economic data. So it's kind of like one of those weeks where earnings are not going to move the markets, but it's actually going to be some of the economic data that's coming out. So if we do get that spike in the VIX, if in September or in October, which I am expecting, because I've made myself very clear that before the end of the year I am expecting some type of a correction from the S&P, and if you take a look at the S&P here, you'll notice that we've just been on a consistent rally. Every time we've come down to that 50 EMA, we've just been validated. I can tell you that there's a lot of traders, investors watching that moving average very, very closely. We snap down below that level and we are all the way down to that 200 SMA in no time at 4,000. And that's going to be a decent sized correction of 10%, right? That's very normal. It's very healthy. We've seen that happen. We've seen that play out time and time again in the past. So September right here, almost a 10% pullback. This right here was in October. I think another 9% drop here, so just over 9% here. And the last time we tested 200 SMA was over 18 months ago, so back in June of 2020. So I think that's like 14 to 16 months ago that we actually tested that 200 SMA. So the divergence there, something that we need to be very careful of. And of course, if that happens, the VIX will spike, and the resistance levels to watch are going to be 20, 25, 30. And for the VXN, we're going to be watching it closer to 18.6. So that's going to be the level, all the way as 25.3, all the way as 32.9 as well. So Kathy Wood also talked about the markets. She basically mentioned about the equities, and if you guys haven't checked out the summary video I put out, she basically mentioned and talked about how in 2021 we came in with growth flying. That we saw from mid-February to mid-May, we saw a lot of the value cyclical sectors outperform the tech and the growth sector when growth in tech basically plummeted, and then we saw some type of defensives play out. So defensive and FANG stocks also considered as defensives because they are an easy way for you to park your cash while having some growth. So those sectors rallied, and now she's forecasting a lot of the innovation-based strategies, a lot of sort of growth to pick back up once again. So we'll see what happens. If that is the case, we could see a lot of the small cap, mid cap, a lot of the biotech, healthcare stocks, hyper growth stocks to also rally as well. But the markets, with the valuation where they are and how rich they are, I find it hard to believe. But at the same time, Kathy Wood has not really gone over like her trading or investing philosophy is not looking into the traditional metrics like the price to earnings, price to sales, because those are more like trying to value the company. Those are more value investor type metrics. She looks at more in terms of growth. So a very, very interesting take, and that's basically what I like to focus on from her, is the macroeconomic picture. All right, so let's just go over Alibaba. So BABA. Going to go over that as well. So we'll go over Tesla right after this one. But Alibaba right now, 180 is the next target that I have on the stock going into next week. So that is going to be the near-term resistance to watch for Alibaba. Support is going to stay put at close to 160. All the way was 148. So those right there's going to be plenty of demand inside this green rectangle. Like I said before, there is buyers kind of stepping in inside this green rectangle, not once but twice now. So both times we dipped inside this green rectangle, we had the buyer step in on decent volume to push us back higher. So $180 is going to be that next resistance to watch. On Friday, we did see a little bit of selling momentum here because of the common prosperity goal and how Alibaba is also going to be incurring this expense, which is going to be north of $1.5 billion to as high as $15 billion. So that is going to hurt the actual profitability of the company, and as a result, earnings per share contraction for this company as well, because a lot of companies are pledging towards this goal of common prosperity and reducing some of the wealth gaps over in China. So how does that play out in the future? Obviously, in terms of the actual cash, that's an expense for the company. But so far, I mean, materially, fundamentally, a lot of the companies, including Baidu, Tencent, Alibaba, they've grown, right? They've grown double-digit growth rates, 20, 25, 27%. So fundamentally, they remain very, very strong. It's just the stock price that's kind of disconnected from reality, which is the actual fundamentals of the business. But of course, it's also pricing in all the risk related to the regulatory issues and potential investigation and scrutiny happening in China. So $180 is the near-term resistance, and like I said, we have to take it slow by slow, right? We have to progress baby steps for Alibaba at least, because we're not going to see a rally all the way up to $300 in just a week, right? This is not going to happen, but instead we're going to make slow and steady progress for Alibaba as well. So yes, Alibaba was green in yesterday's Hong Kong market. I think it was up a little bit over 1.6% the last time I checked. Let's take a quick look on where it's trading. So it's up another 1.1%. So trading past over 170. So yesterday so September 6th, it was up over 1.88%. And today it's up over 1.3%. So Azar, thank you so much for mentioning that. So yeah, markets are open here in Asia, and they are up over 1.3% right now. So that could also lead to some more momentum to the upside for the stock, and $180 is going to be that next target that I'm watching going into next week. All right, let's talk about Tesla now. So Tesla. Still in this ascending pattern, still making higher highs and higher lows. So 750 is my next target, and that's the next resistance I'm watching for the stock. The momentum has kind of slowed down, so you'll notice that volume has been okay, but the price has not really moved all that much over the last 4 trading days, right? So coming in from Tuesday of last week till Friday, so the entire week we basically got rejected at 740s. So 740 here, 741, 740, 734. So it's just been kind of consolidating sideways. So it's more of like a sideways, trading pattern as opposed to seeing some more continuation for the stock. So, the RSI is approaching some type of an overbought level. So if you take a look at this horizontal red line right there, so it's the red line you guys see on the chart. So we have gotten rejected at that level 2 times, right? Twice in the past. So once over here back in June 28, once again in August. Both times we saw that correction, right? So Tesla over here basically dipped a little bit over 10% when the RSI pulled back. And this right here was another time when we basically pulled back 11% after the FTC investigation began. They also launched a probe into the autonomous driving for Tesla. The RSI came back down once again. So that is a good indicator for us to see where we are. We're still kind of a little bit shy of that resistance, which is why I do believe that 750 is still possible for Tesla before we see any type of a pullback. But even if we do see any pullbacks or corrections for Tesla, $700 is going to be the level to watch. That's kind of aligned with this higher low. So that ascending support level, and then if you remove everything, you've got the moving averages sitting roughly at 688, 685. So as we kind of develop more price points, they are going to creep up to more $700 levels, because these moving averages, they basically remove the last day and they add new days of prices, right? Hence the new plots that we're going to see for these moving averages. So $700, very strong support. That's the higher low that's inside this uptrending channel. It's also aligned with those moving averages as well. So those right there are going to be the levels to watch. And of course, resistance still stays put at 750 if we can get some more momentum to the upside, considering that the RSI is not quite overbought yet. So that's going to be the level to watch here. All right, so J-Pawn isn't going to taper or mess with the rates until after he gets reappointed in February. Risk on caddy, deploy capital undervalued by your caps. Yeah, so risk on, yeah, I agree. So risk on in general has been the market's trend, and recently we have seen that a lot of the growth names, and of course it kind of is, I don't know which I think FANG can be put into more of a defensive category. I don't consider them as more risk on, even though they are a little bit, because they are in the technology sector as a whole. So if the technology sector drops, a lot of the FANG stocks also pull back, but they're more sort of defensives. I think Kathy would also mention that defensives and FANGs are kind of like in that same bucket. But the markets in general are more risk on, right? And we saw that on Friday as well because of the jobs number that came out. So job numbers drastically disappointing lower, 230,000 versus over 700,000. That was the expectations. So much lower. And that, of course, raises the question once again if the Fed is going to start tapering sooner or later, or if it's going to get postponed once again. So, that's a big question. If they postpone it, I think the markets have a few weeks worth of rally in them once again, and we see some more push higher for some of the higher growth names. But if we start tapering once again in September or in October, if they announce it in September's FOMC meeting, then that could obviously lead to some more volatility. And I'm really interested to find out where the yields basically go, because the 10-year yields have just been making this higher high and higher low pattern. So you'll notice that the markets are open for this. We are slightly up over 35 basis points, but this has been the pattern, kind of like a bullish pattern where we are making these higher highs and higher lows for the 10-year yields. All right, let's take a look at Amazon very quickly. So Amazon right now starting to pull back a little bit from that resistance of close to 35-30 levels. So we have dropped just over 1.6%, nothing crazy. Strong rally still from Amazon at under 3,200 all the way to highs of 35.30, so that's a jump over 11%. But if you, again, take a look at the resistance here, so this right here is the horizontal red line that I want you guys to focus on. You'll notice previous resistance got rejected, previous support. So all resistance level turning into a new support, and right now we are getting rejected almost exactly at that level for Amazon. So 35.80 is still going to be my near-term resistance and the target that I'm watching. Support level roughly sitting at 3,400, kind of aligned with that 50 EMA as well. But I am bullish on Amazon. You guys already know, so price target in the medium term is going to be $4,000, which I'm expecting from Amazon. Forward price of sales are still somewhat rich for the company, but I still believe that the growth is very, very strong considering how big the company has gotten, and they're still growing at 20, 25, 30%. And they've done that for the last 10, 15 years, right? And their AWS business is still growing, so they have a lot of potential for growth in the future as well as they continue to expand in other business segments. So 3,400 support level, 3,580 next resistance, $4,000 is my price target. All right, let's take a look at Moderna, mRNA, and then I'll go over some of the other stocks as well. So Moderna seems to be starting to break out here. 410 was kind of like a resistance that we were watching, but Friday it was up over 4.7%, so strong breakout, but on low volume. So the volume was kind of low. 13 million shares are traded, whereas in the past when we've seen those successful breakouts over here, significant volume, right? So over here we traded over 53 million shares, 42 million shares, this right here 54 million shares, so a lot of volume kind of kicked in on those breakouts. So 410 still getting a strong breakout, but the volume needs to be the big driver. If we see those more volumes kind of come in, then yes, Moderna could continue on this uptrend beyond 410 back up to 450, 460 levels. But this has also been a really volatile stock, so it's not for me. So not really trading or investing in this company because of the beta and of course the incredible volatility that we've seen for this stock. But that being said, you know, Moderna as a company is very strong, but the valuation I think remains pretty rich for the company. Let's take a quick look here. So 48 times earnings and 24 times sales. I think CRISPR and Vertex are better value plays in this market compared with Moderna and where it's trading right now. So again, that's just my opinion. You know, I'm long Vertex as well as their partner with CRISPR Therapeutics in the CF sort of sector. But for Moderna, with the vaccinations, with everything that they have going on with clinical trials in different markets as well, I think it's a strong pick, but just the valuation is trading at a bit of a premium here. And technically speaking, it's starting to break out, so 410 is going to be the support level near term going into next week. And of course, the next resistance is going to stay put. Let's take a look on the 4-hour chart. It's going to stay put at closer to this level, at close to 429, 430 in the near term as well. So we had kind of like a rejection here, somewhat over here before we saw another breakout to the upside. So 430, 429 is going to be that next resistance level for Moderna. All right, so let's take a look at AMD. So yes, so Kevin, I can go over IWM as well. Let's see match lines. Okay, yeah, I'll go over that in just a second. So AMD 110. You know, I've talked about this stock before. That 110 has been kind of like the fair value for AMD. My price target was 110 for 2021. I don't expect like big moves from Advanced Micro Devices. I think the big moves have already happened. From $74, you know, we rallied all the way to 122. That's a 68% jump. 68%, and this was a strong rally from the middle of May all the way till like the first week of August. So I think the majority of the move has already happened for AMD, unless they actually finalize and close on their Xilinx deal. If that comes through, then yes, I could see that acting as being a catalyst here to push us back over to 122, 125 new all-time highs. But for the most part, you know, still expecting some more consolidation here. $111, $110. We've kind of gotten rejected at that level several times. And support level is going to stay put at close to $100 per share for AMD. So I do expect some more sideways trading, no crazy movement for AMD. The volumes dropped off substantially, so you'll notice the volumes come down pretty significantly here. So not expecting huge move unless of course a Xilinx deal goes through. Alright, let's take a look at Lucid, then we'll go over NEO, then we'll go over IWM. So IWM first. So this right here is going to be the pattern for the Russell 2000 ETF. We had been forming kind of like this higher low pattern. So we were testing this for quite some time before we breached it a couple times. So I'm actually going to go ahead and remove this. But for the most part, you know, it's a very simple pattern to identify. It's a range bound pattern, right? It's just trading in a consolidation horizontal pattern, so to speak. So we've just been getting rejected at this 234 level, and we've just been validating that support at 206. So even recently we came all the way down to 210 before IWM basically rallied over 9%. So next resistance to watch for this ETF is very clear to identify at 234, and support level is going to be sitting roughly at $206 a share. So yeah, a lot of consolidation here for the small cap Russell 2000 ETF, and then again, those are going to be the levels to watch. All right, let's take a look at Lucid. So Lucid Motors have had a strong recovery. You know, we're almost at $20 once again. So 2077 was kind of like the level that I was watching. A huge gap fill on heavy volume as well. So that's very strong. So I'm going to go ahead and delete this. That was originally the gap, right? When we were talking about this during our live stream, Lucid Motors basically dropped significantly. This was the massive gap. Then we filled it a little bit over here. Then we filled it a little bit over here. And now after this rally, it's pretty much non-existent, where the gap is gone. So we filled this entire gap that's very strong, and a lot of volume kind of kicked in for Lucid. Next resistance and that target is going to be $20.77. So this right here is going to be that next level to watch for Lucid. Of course, support is going to stay put at 1750 levels that we have validated in the past couple times, once here, twice here, and that would be the next level to watch as a support, in my opinion, for Lucid, and the next resistance is going to be at $20.75. All right, next up we're going to watch NIO, ticker symbol NIO, still in this downtrending pattern here, nothing crazy, but 4150 is going to be that next resistance right there, kind of aligned with that 50 EMA, and if the volume kind of kicks in, then yes, I could see a breakout for NIO beyond $41.55. So that would be the first resistance, all the way as 45.50. Both of them are kind of aligned with those moving averages. We got the 50 EMA sitting at 41.50 exactly, and then $45 is where the 200 SMA is. However, I did notice a 300 simple moving average. So 300 SMA is the red line. We have been validating that support quite a bit the last couple days. So just been hovering around that level before we saw that push higher. But still in that bearish context, right? So we're still in sort of like this downtrending channel. So until we kind of break free from that downtrending pattern, I don't expect a trend reversal yet. In order for us to see a trend reversal, we need a couple breakouts in order to make some higher highs and higher lows, and for it to make sense to continue on that momentum and back up to $55 and even as high as $60, $65 a share. All right, so we went over NIO, Lucid, we went over a lot of different companies. But yeah, if you guys have any other suggestions, we'll probably do that for like 5-10 minutes more, and then call it a decent live stream here. Let's take a look at SPY. So SPY we've already, I think, covered, so I'm going to go over S&P more, only because I've already talked about how there is some higher highs and lower highs being forming, so negative divergence still there, and we're now starting to stabilize, so the buying pressure is kind of slowing down for the S&P 500. So I would be very cautious, but that doesn't mean that we can't make all-time highs anymore. I mean, certainly the S&P's shocked a lot of people. I mean, just about a year ago, at the low of the pandemic, we were at lows of 2,200. Right, there's targets to as high as 5,000, 4,800, 4,900 on the S&P. So it can certainly continue to move upward, right? It can continue to push higher, but I'm just cautiously optimistic. When I mean cautiously optimistic, that means that I'm not aggressively buying in this market. There's specific undervalued stocks that I would buy. There's specific dividend stocks that I would buy, but just when it comes to high growth, super rich valuation stocks, not really doing anything with them, because once the market corrects, some of those companies will drop more than the companies that are undervalued, already trading at low valuations, right? So if you're buying something that's undervalued, that has a very low valuation relative to where the market is trading, relative to its peers, there is going to be very limited downside risk. That's why I feel a lot confident about Walgreens, Vertex, Corsair, some of the companies that are undervalued, than companies like Upstart, Amazon. Like those, in my opinion, could fall more than some of the other companies, just because the valuation is rich for Upstart, for Amazon, for even I can make a case for Apple, right? It's a little bit rich. All right, so I did get a lot of recommendations here. So let's see. Let's just go over to Upstart very quickly. So we have covered Tesla in the past, so you can kind of go back and check the live stream there. But Upstart, strong breakout, still going strong. $247. I mean, that is just an incredible number for Upstart. We're up over 133%. That is insane. I mean, the RSI way too overbought, the MACD way too overbought. The valuation, if you come down, it's trading at 349 times earning and 46 times sales. I mean, I can't justify, like in my actual like conscience, I can't justify buying at these prices. I personally can't, because it's too much, which is good if we got in at closer to 110, 115. We were talking about this entire accumulation phase. So this right here, the consolidation that we saw, and when we were getting rejected at 134, 135 strongly for the most part over the last month and a half, the valuation was still rich, but it wasn't like crazy. And now we've just seen that breakout and that continuation. So, I mean, not really doing anything. I mean, we have a position in this, not touching it. We trimmed a little bit at our target. But rest, we're just holding on with this market multiple expansion, and another 3% gain on Friday. This stock just keeps going. Every time I check this, it's just green. It's green. So, it's overvalued right now, so I'm not buying, but I'm not selling either. So I'm just holding on to this stock. All right, let's take a look at PayPal. So PYPL, PayPal also had a decent breakout. Now it's starting to form some type of a bull flag here. Very, very small bull flag. So we saw a rally over 9%. Now we're just kind of consolidating sideways. And if we break out to the upside, my price target is going to be at $310 is my next resistance, and the next target I'm watching for PayPal as well. So $280 support, that's kind of aligned with that 50 EMA, and next target and that next resistance is going to be $310. I think PayPal is going to finish the year around 300. That's kind of like my estimate for the company, and with the new stock trading platform as well, depending how that launch goes, what the logistics are for when they're launching it, where they're launching it, and how they're gonna build their UI, I wouldn't be surprised for us to see another breakout for PayPal. And again, $300 to $310 is kind of like my target for the end of this year for PayPal. I think we're going to end right around those levels. Year to date, I think the stock is up over 23%, so that's good. It's outperformed the S&P 500. If we end up at closer to 300, that's going to be another 6% gain. We're looking at almost 30% year to date gain, so it's very strong for PayPal. So let's take a look at Visa. So Visa, we did acquire a position here, a small position to begin with on Friday on Visa, just because it was testing the 200 SMA. It's down so much from its all-time highs, down a little bit, 11.7%. No catalyst, nothing. It's just the fact that we were trading at pretty rich price of sales, so it was trading at well over 25. If you guys remember correctly, at the end of July, when we do our end of the month updates, we go over the entire market's price to earnings and price of sales. And a couple of stocks that stood out to us were Visa and MasterCard. We talked about how Visa, MasterCard, both of them are trading at a pretty rich price of sales multiple. And what happened in the month of August? If you come over to this right here, the last couple months, we've seen declines for Visa and MasterCard. In August alone, the stock was down over 7%. In September, it's already down a little bit over 1.7%. So that, for stock to sell off, it doesn't need any reason. It doesn't need a catalyst to sell off. If the valuation's high, it will see some profit taking, right? So that's the same thing with Visa as well. And right now, of course, it's come down quite a bit. The valuation remains rich, but it's at a reasonable, sell-off from all-time highs for us to establish a very small position just to get a little skin in the game and get started, and of course add more aggressively if you come down to 205. If you come down to 195, even as low as 190, I mean that would be levels that I would be very interested in to adding more aggressively for Visa, because Visa is a strong company. I mean the margins are ridiculous, 95% gross margins, 50% net margins. I mean for every $1 that you make Visa revenue, 50 cents trickles down to profit. That's the EPS. I mean who doesn't want to be in that business, right? Like I would love to be in that business of where the margins are 50% plus and you're doing over 7, 10, 12 billion dollars in revenue each year. So I mean it's a strong business model. If they start to hike their dividend yield as well, it's going to become more attractive to me. Right now it's only 0.5%, but if they get up to 1%, 1.5%, eventually even 2%, because they've got the cash flow to do it, they've got the money to do it, but right now they're funding a lot of their growth, they're doing a lot of acquisitions, and they are kind of growing towards that digital sort of wallets, digital finance space. So they are doing the right thing, but if they start hiking that dividend yield, I think that's going to become more interesting for a lot of investors out there. So 220 support, all the way as low as 205, all the way as low as 195 are going to be some of the levels to watch. I'm expecting this stock to come down. Like I want this stock to come down so I can buy more shares. But even if it continues to rally, gets the bounce off of 200 SMA, that's totally fine as well. All right, so we've already gone over Lucid Motors. We've gone over a lot of different companies here. So I'm going to quickly break down Airbnb. And so Airbnb, you'll notice that we are pushing higher. So after they had a really great initiative of opening up about 10,000 homes in Europe for Afghan refugees, we saw that breakout for Airbnb of close to 10%. We broke out, retested that support, so previous resistance now turning into a support for Airbnb. 152 is still going to be that support level to watch for the company. And my next target, or that next resistance I'm watching, is going to be closer to 168. So that is the level that I'm eyeing on Airbnb. It's been on a solid uptrend as well. So higher lows being formed for the company. So again, those right there are going to be two levels to watch. I do have a list of a couple stocks that I wanted to go over. So we already covered Visa. So let's just go over very quickly. We're going to Amazon, Tesla, we went over. And then let's just go over Autodesk very quickly. So Autodesk has been selling off as well, right? This right here was a previous swing trade. We saw a strong rally of 26-27%, but since then, after the earnings, we have come down substantially. And this is normal again because the earnings were great for the company, right? Earnings were fantastic, but the valuation was rich. We've talked about this. That's why I didn't want to buy at these levels, and now it's starting to come down. I'm really considering it, but 267, 265, those are going to be the levels that I'm watching very closely for Autodesk. Certainly oversold. The MACD's come down to 31. The RSI has also come down substantially, so definitely oversold in my opinion. But now it's trading below the 200 SMA, so I would like to wait and see where the momentum goes in the future going into next week. So if you do see some more selling pressure, considering the volume is really high, so this selling pressure is valid, it is there. It's not something that we're seeing out of fear of our retail investors, but this is more institutional selling just based on the momentum. You're down over 5%, and look at the volume, right? Volume on Autodesk on Thursday, which was September 2nd, 5.4 million shares. That's substantially higher than the average 10-day, which is at 2.4, so twice as much as the average 10-day volume. So this definitely goes to show that there is a lot of selling momentum, so we just need the price to kind of stabilize, exhaust all that selling pressure before we can start to establish a position and see some signs of recovery once again, right? The RSI MACD definitely oversold, so it's on my watch list, and I will be starting a position very soon, but just waiting for that right entry based on the price action and volume as well going into next week. Let's take a look at Zoom. So Zoom also, right, it's showing signs of a potential reversal here. The RSI is definitely oversold. The MACD is definitely oversold as well. After the earnings, we basically sold off. Still great numbers, right? If you take a look at any other company in the markets, if they were growing at 25, 30, 40, 50%, they would have seen a rally, right? But for Zoom, it's the whole different story. It's 50% coming down from 200+% growth last year. So that's the decelerating growth that you're seeing for Zoom as a company, which is a cause for concern for a lot of investors. But to be honest, didn't we all see this coming? Like, didn't we already know like this was gonna happen? I feel like Wall Street always likes to make chaos off of things that we already know. Like Amazon, they had Amazon drop all the way down to 3,200, which was funny because we already knew the year-over-year comps were gonna be tough. Right? Same with inflation. We already knew like year-over-year comps are gonna be tough. Like when something drops so drastically in previous year and then rises once again the next year, of course those year-over-year changes are going to be substantial, but that's like known, it's a known fact. But with Zoom also we saw the same thing, so there's opportunity for a swing trade in my opinion. Long term, I'm still kind of trying to get my head wrapped around what Zoom is going to do and what the valuation is going to look like. So yeah, Google has been a beast, absolutely, I agree. Google has been one of the best stocks in the markets, up over 60% year to date, so strong rally for Google. But for Zoom, watching 275, 276 as the next support, it's also got a huge gap to fill here. So that right there is going to be the gap, potential gap fill for Zoom if you do get a retest back up to $333, and that would be a gain of over 11.5%. But again, the RSI is oversold, the MACD is oversold as well. So that would be the gap to watch for Zoom going into next week. All right, so we're gonna one more stock that we're gonna break down very quickly. If you want me to go over Google, so what do you think about Google? All right, so let's see. So Google, I think, is one of the FANG stocks that actually trades at a fair valuation and doesn't trade at super rich valuations. If you come down to the financials, you'll notice that price earnings is 31, borderline rich, I should say, and price to sales just about 9. So it's not undervalued, it's not significantly overvalued. I'd say it's like fairly overvalued with a little bit of pinch of some premium there built in. If it was obviously trading at 20 times price to earnings and 4 times sales, that would have been undervalued for Google, and we would have absolutely had the opportunity to buy more shares of Google. But right now, just based on the technicals, and just based on where it's trading right now and this rally that we've seen, I'm waiting to establish a position on this company, but I feel like I'll be waiting for a long time because this stock just is reluctant to come down. I mean, we've just seen those rallies, accumulation breakout, slight pullback down to that 50 EMA, and just absolutely pushing higher as well. So yeah, that right there, the next resistance to watch is going to be at closer to this level, 29.33, 29.32, that resistance. and 2800 is going to be that next support level to watch, all the way as well as 2700. That would be like an ideal price. So Kevin, buy Google on the 50-day SMA. Yeah, so 50-day EMA SMA, that probably will land at the same price. But yeah, 50 EMA, we've perfectly validated that level for Google so much that it's kind of like the best buy the dip opportunity for this company. So this right here, previous validation, previous validation, previous validation, and I can bring up another stock that is perfectly validated at that level. That's Facebook. Every time we come down to that 50 EMA, we've perfectly validated that support and pushed up. Same pattern for the S&P, right? S&P, Facebook, Google follow the same exact pattern of validating that 50 EMA, and they've just completely gotten bought up every single time. So if we come down to that 2700 level, I think that could be like a good starter position, and then continue to kind of build out a bigger position in this company as they continue to expand their business as well. So almost a $2 trillion market cap for Google. All right, guys, so we're probably going to end this there, just about 45 minutes, just a little bit shy of an hour, but thank you so much for joining in. I hope you guys enjoyed this quick live stream to go over some of the stocks to watch. We broke down, I think, close to 15, 20 stocks in this video, but of course, thank you so much for joining in. Yet another week is going to be starting very, very soon. I'm super excited to get started. I just hate these long weekends, but finally, it's over. So thank you so much for joining in. I really appreciate you guys' support. Make sure that you drop a like if you enjoyed this video, found it helpful, and also subscribe if you're new to the channel, and check out the Patreon link down in the description below if you want to join our Discord. Of course, get access to real-time updates and alerts. The first week of the month is the best time to join if you want to get access to that as well. So thank you so much for joining. I hope you guys have a great night, a great day wherever you guys are watching from, and I hope you are ready for yet another week. So I appreciate you all. Take care, and I'll see you guys in the next live stream.